Welcome back to the channel and thank you for tuning in. In today's video, we are doing a complete altcoin analysis. Now, before we get into the altcoin analysis, make sure to check us out on our main YouTube channel, Mega Whale Crypto, where we post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. And if you're interested in more of that kind of content, you can join us on Telegram. That will be the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency, with Bitcoin, and the relevant economic news. And if you were interested in taking your trading to the next level, you can join us in our VIP group where we post trading setups with exact entry prices, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. You'll also get access to all of our group chats with over 700 members, our trading chart and education chat, our daily video, help, news, and trade setup chats. You can find out more information about our VIP in the pinned comment of the free channel by clicking my name, or these two links showing you a video inside the channel and a 50-month trading track record by the first link. Check it out, guys, and let's dive into the altcoin video. Okay guys, let's go ahead and get stuck into it. In today's video, we are taking a look at both the total market cap, the Ethereum chart, as well as the total altcoin market, discussing the potential for reversals, the implications of further corrections, the high time frame trends, and of course the short-term levels you should be paying attention to. We're going to try glide through this video nice and quick today, as we have 3 separate charts and a lot to take a look at. First and foremost, I want to take a look at the total market cap chart. The total market cap chart is showing us a few very important things. It is showing us some key high time frame invalidations and supports. It is showing us some very interesting negative momentum shifts we need to take a look at. But most importantly, it is showing us some structural relevance in regards to what we saw in the 2021 cycle, all of which we need to take in context with each other. So taking a look at the total market cap, we can see as per 2021, we had a nice strong high at around that $3 trillion level. Correcting all the way back down, we retested the 2017 high. If we take a look at the 2017 high, when we broke above that region, we saw a very explosive initial rally for the total market cap, followed by around a 30% correction to come very close to retesting that 2017 high. We did not retest it, but we came incredibly close to doing so. After that correction dissipated, we then saw the price rally aggressively to create the first top of that 2021 cycle. If we take a look at the current cycle, we can see the price action has completed that first step. It is retested and broken through the 2021 high point at $3 trillion, and we have seen a strong rally and now a strong correction following that breakout. This is significant for 2 reasons. Number 1, it shows similarity to prior cycles on a structural basis. Number 2, it shows us a very strong invalidation where, if broken, could mark deviation from what we would consider the range high / historical patterns we have seen develop on the macro scale. And that, of course, is going to be the $3 trillion level, which lines up with the 2021 high. If the total market cap drops below the $3 trillion level, breaks under the 2021 high, that would mark this move as deviation from the high and could result in a stronger high time frame correction for the market. Now, we discussed in our prior videos what would need to happen for that move to accomplish. Now, Bitcoin dominance being at 58%, of course, Bitcoin will mostly move the total market cap. So we're looking at Bitcoin primarily. Again, for Bitcoin to see a larger correction, we would need to drop underneath that $86,000 region. We are currently sitting at a significant support at around 91 to 92,000. Again, we will need to lose this level and push into this lower VRPV gap. If we do see that occur, if we see this downtrend continue on Bitcoin, it is entirely possible the total market cap could correct below these levels. So if we want to see where that is going, we have to pay very close attention to the short-term changes on Bitcoin, particularly at the current level of support we are sitting at, and again, that $86,000 level just below. As below 86,000, we drop into this low historical resistance range, which will result in bearish macro continuation. So the macro charts for total and for Bitcoin are not bearish yet. We are seeing some potential signs of top signals, such as these red dot prints. These, of course, are negative momentum shifts, suggesting that the buyers are running out of steam. They are exhausting. The sellers are taking control. Now that develops over a higher time frame, that could move into a downtrend, but we will of course need to see that these levels of demand that have previously acted as support fail to sustain to actually see those continuations. Moving over to the total altcoin market again. Altcoins had suffered quite a fair bit over the last few weeks, and this is primarily as a consequence of the developing uncertainty surrounding future interest rate decisions, okay? Now, as we already know, the expectations for 2025 were 5 interest rate reductions over the course of the year of 2025. That was incredibly bullish. As we know, interest rate reductions eventually result in risk asset prices rising, inflation going up, and the dollar decreasing. But in the December meeting, Jerome Powell came out and said they are looking to only do 2 interest rate reductions. That news has significantly altered the risk asset climate, pushing perceived systematic risk up in a future period, because again, policy stipulates demand. The market, being future seeing, looks at the potential implications of future policy implications, or those implications of those policies not occurring on the market, and then it prices that in. So we see, again, these massive drawdowns in the risk asset market, so Bitcoin, for altcoins particularly being a more speculative asset, and even for stuff like the S&P 500 over the past few weeks, as a direct consequence to the economic policy uncertainty as a consequence of Jerome Powell stating that in the press conference. So it is likely we do see this uncertainty surrounding risk assets to continue until the next interest rate decision, where if they do actually drop interest rates, we will very likely see the market rally again. But if they do pause interest rates, that's going to be them, acting on what their opinions and what they've been saying is, which is we are looking to move towards a aggressive attack on inflation in 2025, which is counterintuitive, which is contradictory to what they would need to do if they are looking to drop interest rates. Because again, if you're looking to bring inflation down, you're definitely not going to be dropping interest rates, because that will in turn push assets up and bring inflation up. So we need to keep an eye on that. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other 2 exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. But looking at the altcoin market, in terms of our structural levels, I'm not massively concerned for altcoins on a macro scale for the altcoin season, as long as 840 billion holds. Now, that doesn't mean altcoins aren't going to get wrecked if we drop there. Of course they're going to get wrecked. But what it means is that while we sit above 840 billion, the potential to move into a future parabolic move for altcoins is still on the cards. For the short term for altcoins, of course, they have dropped a significant amount, which we'll discuss in a second. But for the macro, 840 billion needs to hold. Now, there are a lot of questions around the total 3. Why is the total 3 up so much when a lot of altcoins are down? The simple answer is market capitalization dilution. If you remember back to 2017 or before, or even 2021, in 2017, there were like 1,000 altcoins, 2,000 altcoins. In 2021, there were 10,000 altcoins, maybe around 10,000, maybe we just crossed over 10,000. In 2025, there are about 10,000 altcoins probably created every 24 hours on things like Pump Fun and all these different scam coins we see. All of those coins essentially suck up the money. Again, the same amount of money is spread across significantly more assets. So we'll see each individual asset perform less, even when we're seeing the total market cap continue upwards. But that doesn't invalidate the significance of the total market cap, but it does require us to look at individual altcoins on an individual basis a little bit more. But if we're looking at the broader altcoin market, what is the potential to see altcoins go back up? We can use this chart. So again, above 840 billion, altcoins should have their day at some point. Okay, we had a fantastic move toward the upside upon breaking that. Some altcoins went up 600%, some up 100%, 200%. Fantastic move. Pretty much no one took profits, which is not good to see. But again, we have now seen a correction back down. One of the things I am quite concerned about at the moment is the breakdown of the 50 EMA. Now, the 50 EMA is not necessarily a level of support, but it is a suggestion on the strength of the current trend. If we take a look at the prior cycle, when we broke above that horizontal neckline of resistance, right, when altcoin season started above this level, we remained above the 50 EMA the entire time until we broke down and saw a strong correction. So the 50 EMA isn't suggesting that we are going to see a strong correction for altcoins, but it is suggesting that we have relative weakness here for altcoins in comparison to what we would necessarily expect it to be, and how it is, or slash how it is developing. It is developing to a point of weakness, which could lead to a continuation downwards. But for that to occur again, Bitcoin is going to need to drop below this support. So again, if Bitcoin sustains here and bounces, altcoins will rally again. If Bitcoin loses this level and gaps into that, 90,800 sell side liquidity, looking at 88,000 sell side liquidity, we're looking at 86,000 support, altcoins very well could see a cataclysmic correction back into that 840 billion, that 200 moving average, before then continuing back upwards, or worst case scenario, continuing downwards if this level is lost. So it is a period of uncertainty, it is a time of uncertainty, and as we mentioned, that uncertainty will likely last while the policy surrounding economic, well, what should I say, interest rate reductions, which is what is driving the market, essentially what drives the market, is uncertain. If you have been following the channel, you would know, guys, we bought Bitcoin at 16.5K, okay? We sold Bitcoin at 32,000. We rebought at 26 and we sold at 96,000, claiming we were looking to exit. We exited all of our positions. We bought back at 102 and sold at 106. When we sold at 106, this was early November, around about this region, we exited every position into cash. That included every single altcoin position we had held at the time, included all of our Bitcoin positions. We pretty much went entirely cash right over here. Now, the main reason we did that, you can see here, I'm sidelined, I'm cash, I'm all in cash. I said that mainly due to the surrounding uncertainty of interest rates. Policy stipulates demand. We need to track that, particularly going forward, and watch for any changes. One thing I've definitely noticed is that policy doesn't change immediately. They're not going to go from dropping interest rates to rising interest rates. They generally move from a period of certainty to uncertainty, to indecision, back to uncertainty, and then they change. So it's a process, it is dragged out. If we change too rapidly, people get concerned. It is a big problem. Okay, it's hard to convince people to even make those changes rapidly. It is usually moving from a decision to indecision and uncertainty, and then swapping. So the best case scenario is they move into indecision, and then they continue the current trajectory, which is dropping interest rates. The worst case scenario would to be moved to indecision, hold an interest rate pause, and then continue. That would be a bad scenario for risk assets, because during that time of indecision, we will likely see the markets come lower. So overall, guys, keep your eyes on those levels. I don't think the top is in yet for Bitcoin. I think at the moment, the market is simply biding its time. It is waiting to see how this policy is going to develop. And if it develops to the bearish end, well, then very well, we could see the top in for the short term for Bitcoin. But for now, we are watching our key levels. Alright, let's finish up on the Ethereum analysis. We're going to keep this one short because there's really not too much to say. The key levels we are watching for Ethereum on the short term and the higher time frame are as follows. The most significant level we are watching for Ethereum to still have the potential to see macro continuations is 2,800. If at any point the 2,800 support is lost, we will then see the price action move back to our 2024 lows. We do not want to see that happen. For us to reach 2,800, the critical level of support we have between the prices of 3,000 US dollars and $3,120 will need to break. This is going to be our short-term and high time frame immediate level of demand. This is going to be our major reversal point if reached. If we reach that level, we are looking for reversals for Ethereum. If we break below that level, we are then watching for corrections to 2,800. For Ethereum to see continuations toward the upside on the higher time frame, we will need to break this downtrend as well as break above the major level at $4,000. If you remember back to our prior videos, our $4,000 resistance was a resistance we discussed that if we are able to sustain above 4,000, we will see weekly continuations into macro highs to likely create a macro top. Of course, with that double top rejection, we've also seen the momentum decrease on the weekly, which is a sign of absolute weakness. If we move over to the smaller time frames, such as the hourly chart, we can see over the past few days, the price action has begun to show very small changes in volatility, right? We've had this a massive increase in bearish volatility, and we are starting to see the price action do what we call a pinch and compression with that 50 EMA. Eventually, we are watching for a flip of the 50 EMA, and when that 50 EMA flips, that is when we're going to be more confident in taking long positions on Ethereum, and that this level of support will sustain for continuations back upwards. Until then, just as we are playing with altcoins, we are in a degree of uncertainty, particularly with momentum rising over the hourly since we had that breakdown occur right over here and the price action continuing down. This is signifying to us that the buyers are stepping back into the price action, but the selling pressure is still incredibly aggressive, which is basically absorbing all of that buying. So it is not what we'd like to see over here. If that does continue before Ethereum is able to show some real strength, if we see that RSI breakdown before we start to break some of its highs, that could tell us that the buyers, although they have begun to step in, have exhausted, and the price will continue back into our next support. So we are in a period of indecision. Again, for the macro certainty of this trend, we need to see some of these major levels break, but while we sustain above this level of support, the potential for those moves are on the table. So am I bullish on Ethereum right now? I'm not really that bullish on Ethereum. I am watching to see how the price action plays out. In fact, Ethereum is looking pretty much worse than Bitcoin, and it has been doing so basically the entire cycle. So nothing too new there. Anyway, guys, we'll wrap up the video. See you in the next one. Cheers.